how the markets fared today. Nifty closed at 23,650 after a volatile day of trade. My colleague Snehi is here for more details.
Yes, so 23,650 is a level that we've managed to hold on to, but still it's a significant cool off from the day's highest point for the Nifty, and we've ended absolutely flat on that front. For the Sensex too, the cuts have been to the tune of about 0.2%. It was Nifty Bank that saw a similar amount of pressure, about 0.3% cut over there, but the broader end of the market looked largely resilient because you had about 0.1% gain on the Nifty mid-cap, but the small-cap index was the real outperformer in trade with gains of more than 0.7%. If I have to take a look at what the sectoral performance was, your traditional defensives like IT and FMCG were under pressure, along with media, bank and finance. From the IT pack, biggest losses were seen on Coforge, Tech Mahindra, Infosys and Persistent Systems. On the flip side, the Nifty Defense Index was the biggest sectoral gainer, with MTAR Tech, Dynamatic Tech, Paras Defense, all of them seeing gains between 3 and 5%. Following that, you had good moves on realty, energy, auto, PSU banks, metals as well as pharma. Now let's talk about some stock-specific action. From the broader end of the market, you had Jubilant Foodworks that was under pressure on the back of weak earnings, about 8% cut over there. PI Industries, Eris Lives, Bosch, Ola Electric, Zydus Wellness were all under pressure. And on the flip side, Honeywell Automation, Sammaan Capital on the back of some very strong earnings were up 9% and 15%. Techno Electric, Triveni Turbines, Amba Enterprises, Tatacom, IRB, all of them were big winners. You had something like WeWork India that saw strong double-digit gains, along with Protean eGov that was locked in upper circuit of 20%. So overall, good day of trade coming in for the market in terms of the kind of recovery we've seen from the day's low. But yes, we've also slipped significantly from the day's high to end absolutely flat.
Right, Snehi, stay with us because we are speaking about ITC Q4 now. ITC has posted a mixed Q4 performance with a sharp beat on profitability despite a weak top line showing. Now, ITC reported 5% PAT growth led by strong cigarette business performance. Standalone net profit rose to 5,113 crore rupees. Snehi, tell us more.
Absolutely. In fact, it's been a surprisingly good set of numbers coming in from ITC this time around, because remember, on the back of the price hikes and excise duty hike done by the government in Q4, we were expecting these numbers to be highly under pressure. On the flip side, it's a miss on the revenue front. The revenue is under pressure, minus excise that's coming at 16,050 crores and lower by about 7%. But the story is entirely different for EBITDA, PAT and margins. All of them were a beat versus our estimates. The margin number at 40% looking much better than our estimated 33.2. Let's talk about the segment highlights. The cigarette business, which remember is traditionally a business that grows at about 6 to 8% every quarter, has seen an uptick of about 32% in the quarter gone by. So yes, a lot of advanced buying and stocking up was seen in the month of January, evidently on the back of this segmental move ahead of the tax price hike. So very strong move over here, and the management has said that domestic demand for leaf tobacco in the near term is expected to be subdued. The management has also commented on the risks of this tax hike, saying that FY26 outlook remains highly uncertain on the backs of this tax hike. Higher cigarette taxes may weaken near-term tobacco demand. This could also give boost to a lot of illicit trade and production of cigarettes. West Asia conflict had anyway put some pressure on this segment, and they are now focusing on exports to try and offset some of the domestic negativity that they're expecting to see. Shifting focus to FMCG, revenue growth of close to 15%. Excellent numbers here too. Staples, biscuits, snacks, frozen snacks, noodles, dairy, personal wash. You have Fiyama, Ashirwad and Agarbatti. All of them have done really well. Savlon has done well. And the recent acquisitions, Meetigo, 24 Mantra, Organic Food, Prasuma, as well as Mother Sparsh and Yoga Bar have all done well, and they continue to grow at 60% in FY26. Agri-business looks slightly weak. The revenue was down 16% due to delayed sales amid West Asia conflict. Paperboard, paper and packaging was a miss versus our estimates. Fresh food business did well. So overall, it was a good set of numbers coming in. Revenue miss, but EBITDA, PAT and margins were a very welcome and surprising beat versus our estimates.
Right.